Hey everybody, welcome back to Chipstock Investor. We're going to talk about PureStorage today, but first I wanted to address one comment that we received recently about my resting friendly face, always looking angry. So I'm going to try something new. I'm going to do this the entire time.
You smile a lot, actually. All right, Kasey smiles a lot, actually, but when she's talking about investing and technology and financial metrics, um,
I do look angry though. You're right. You're not the first person that's told me that.
there are other actually YouTube investing channels that are much longer on hype and very smiley about it. Maybe those are more everybody's speed. I don't know, but we take this a bit more seriously, not too seriously though. So
I'll
okay.
try.
PureStorage, one of Kasey's top picks of 2024, is doing very well here in the last final month of the year.
It really is. We had a few doubters out there when the stock price dropped a bit, but here we are back again. Let's talk about PureStorage and where it fits into the semiconductor industry flowchart. PureStorage fits into that giant bubble over there on the right side of the chart under tech equipment and devices. They're a provider of flash storage and they help assemble these storage servers.
And then, of course, one of the differentiating factors for PureStorage is they actually have the whole enterprise software suite that runs and operates the all flash based servers that enterprises use.
That point is going to become very important to our discussion and the recent news release that PureStorage put out with their earnings call.
Yeah, the one about the hyperscaler customer that many investors were very anxious to hear about before the end of the year. PureStorage delivered on that front.
There's three main parts of a computing system, therefore three main parts of a data center: the computing portion, the networking portion, and then there's the storage portion. That's what we're talking about today. Storage is where all the data is stored, either in queue or in long-term storage to be used later. Almost all hyperscale data centers at this point have what you're looking at right here, hard disk drives. They're cheap, they've been around forever, and they have been the gold standard up to this point for hyperscalers, especially.
Yeah, but these things make use of mechanical parts. They lack the speed of flash memory that Pure Storage uses to build its storage systems with. And the reason for that is flash memory is a chip versus a mechanical disk drive like this one pictured. And so as Pure Storage has continued to develop its platform, there's been a lot of expectations that eventually those big giant hyperscale data centers, the cloud providers, will eventually switch to NAND flash based systems. That hasn't happened yet up to this point. And a lot of that is because, like any semiconductor technology, it takes time for the tech to mature and for the cost to come down to a point where it's of actual economic use. We discussed a little bit of this 3D NAND chip making and what that actually looks like in the Lam research video we did back in October. Here's a couple of little videos showing how these NAND chips are actually made. And as the layers of these things continue to increase and the manufacturing technology improves, the cost of NAND chips per bit of memory has steadily decreased. Now, you pair that with Pure Storage and the software that they've developed to manage a company's very, very large data set operating within a data center or within the cloud, suddenly this stuff starts to make a lot of sense when you're looking at maybe swapping out and upgrading your old energy hungry hard disk drives that might be operating in the cloud currently. Now, Kasey, we've addressed this a few times over on Semiconductor Insider. We're talking about memory chips. And so the question comes up, is Pure Storage a competitor to Micron, Samsung, SK Hynix, Western Digital, Kioxia, all those players in the memory market?
No, they're not at all the same. They are not actually competitors. When you think about companies like Nick just mentioned, they're preparing ingredients for the system. We'll show you a wonderful picture of some ingredients that look like are going to be made into a delicious Thai dish, as far as I can tell. Think of those as the memory chips. So all of those ingredients don't do anybody any good unless they're prepared by the chef, made into something wonderful and delicious. Those memory chips are taken by a company like PureStorage and created into something actually useful for a data center.
Yeah, that's exactly right. And that's what we try to illustrate here with our semiconductor industry flow. Think of the memory chip makers like Micron, Samsung, SK Hynix, etc. Think of them as the preparer of the ingredients, the IDMs there in the top left quadrant of the chart. And then those ingredients, along with a lot of others, are purchased, and all of those ingredients are designed into an ultimate device, in this case, a storage server by PureStorage, the chef.
Before we talk about who the real competitors are for PureStorage, word from today's sponsor, Public.com.
As you probably know, interest rates are back up again after a sell-off in the bond market, and it's not too late for you to lock in an upwards of 7% annualized yield on a bond account from Public.com. There can be some real benefits to doing that, right, Kasey?
There sure can. Because of those Fed interest rate cuts, maybe the interest rate in your savings account is decreasing, but with a bond account, you can lock in an interest rate in non-invested cash.
And of course, eventually, bond yields will come down as well if the Fed keeps lowering rates and the market reduces the rates on bonds as well. That said, if you lock in the yield right now, that higher yield can last much, much longer than what you would otherwise get from a savings account, from CDs at the bank, money market funds in your brokerage account. Those interest rates are going to follow much more closely the Fed funds rate that has been getting chopped. So a bond account like this one can get you a higher yield on some cash that you would like to keep in a place that's a little bit less volatile than the stock market.
You can get that bond account with public.com/CSI. Your rate is not locked in until you invest. So check that out. Link in the description below, public.com/CSI. So let's talk about who the competitors are for PureStorage. Dell, HP Enterprise, NetApp, even Supermicro, all those companies take those ingredients and prepare the final device.
And so coming back for a moment to PureStorage's competitive advantage, tech researchers like Gartner and others have begun to recognize PureStorage as the leader. You can see Gartner's Magic Quadrant, PureStorage positioned there the highest and furthest to the right, both in basically their technology and their ability to deploy that technology to more use cases. A big differentiating factor is the enterprise software platform that they offer. And that helps make the management of storage cheaper over time. And because they also sell the storage as a service, an option anyways to be sold as a service in the cloud. In enterprise, it can actually offload a lot of the heavy lifting with both the purchases of these very expensive storage devices, but also the day-to-day, week-to-week, month-to-month management of it, because PureStorage also offers a lot of built-in upgrades over time with those as-a-service pricing models. However, this all sounds fantastic. Kasey, there is a problem with PureStorage. There has been actually for going on about 2 years now.
Yes, for PureStorage, they primarily and historically have serviced the enterprise portion of the industry, and it's been in a cyclical bottom. But it is starting to come out of that bottom and into a new growth cycle. But what PureStorage has been focusing on is the hyperscalers and landing a deal for cloud data centers, which would in turn mean AI, accelerated compute.
Yeah, lots of opportunity there if they can get their foot in the door with one of those top 4 hyperscalers. We recently finally got the announcement that it was PureStorage that struck a deal with CoreWeave, one of the GPU-centric data center cloud providers. But who are the top 4 hyperscalers? We don't know which of the 4 PureStorage landed a deal with, but we do know these are the top 4 hyperscalers right here.
Yes, these 4 top hyperscalers, Amazon, Alphabet or Google, Microsoft, and Oracle. We don't know exactly which one it is, but it's one of these very large companies. And now let's focus on some of the comments that were made during this most recent earnings call that address this hyperscaler.
You can see the Q3 fiscal 2025 press release here where they announced the design win for a direct flash technology into the data centers of one of these companies. And in tandem with that, they also announced a strengthening of the relationship with Kioxia, one of those memory chip makers, the ingredient providers that we discussed earlier. We did get some details from management on what this deal actually looks like, which is going to be very helpful, especially as we get into fiscal 2026. That's going to mostly correspond with calendar year 2025 for PureStorage. The CFO, Kevin Chrysler, had a couple of comments on what this looks like on the earnings call.
Yeah, this was a very interesting point, and this is where we can tie in that very important part of the business that Nick talked about with enterprise software for PureStorage. Chrysler said that this agreement with the hyperscaler involves the licensing technology and delivering support services. Hardware specifically is not included as part of the sale to the hyperscaler.
Also, important point here on this, most of the revenue from this deal isn't going to kick in next year. It's actually going to kick in fiscal 2027, which is going to correspond mostly with calendar year 2026. So don't get too excited just yet. The good news is PureStorage expects its adjusted operating margins to be stable next year as they invest to get ready for selling the technology licensing to this hyperscaler.
You may be wondering, what is technology licensing?
It's an excellent question. We actually have a video in the works on this already regarding NVIDIA and Vertiv Holdings, trying to explain how all of this works now that PureStorage has a similar arrangement with Kioxia and one of the hyperscalers. All the more reason to get that out to you soon. So stay tuned. We'll talk about how companies like PureStorage and NVIDIA make revenue off of licensing deals like this. One more plug for Semiconductor Insider. We've actually been talking about this for a while now with our community over there, and how this actually helps with higher profit margins versus the outright sale of hardware or an as-a-service cloud-based model like PureStorage has historically been pushing to a lot of its enterprise customers. Stay tuned or join us on Semi Insider for early access to that.
Link in the description below. We do need to answer the question why hyperscalers would be interested in having flash storage anyways. Hard disk drive has been working just fine up until this point. So why is flash storage a thing? Why do we need it?
Kasey, walk us through these points here. This is a couple quarters ago on an earnings call with CEO Charlie Giancarlo. There's a number of reasons why an eventual migration to flash, solid state, memory-based servers is ultimately inevitable. Hard disk drives are eventually going to get replaced.
Let's take a look at the second point first. So flash storage reduces the need for sophisticated caching and other technologies that hyperscalers have to use to make up for the relatively poor performance of their hard drives. Third, Pure's technology improves the server performance by accelerating data delivery. And then that last point there on this list that he mentions, flash drive improves the reliability and the longevity of the storage. But let's key back in on the first in this list that he mentions regarding power usage. We get a ton of questions about data center energy and data center power. Using flash storage reduces the power load of these data centers. It reduces the space requirements and the cooling requirements for those huge servers.
So this slide has been used a number of times now for a few quarters, and it looks like one of these hyperscalers, because of the increasing performance and lower cost per bit of flash storage over time, one of these hyperscalers has now gotten a new reason to begin migrating to solid state. And because flash chips utilize as much as 80% less power than a hard disk drive, if they spend the money upgrading this system, that means they can have, let's say, 15, 20% leftover power from migrating over from a hard disk drive to be used elsewhere in the data center, like, for example, on these very, very energy intensive GPUs from NVIDIA. If you're looking at where you allocate your capital to build these AI data centers over the next 3 to 5 years, suddenly solid state flash begins to make a lot of sense, especially if you're going out trying to strike these very expensive deals for nuclear energy, small modular reactors, a lot of other things going on in there, like trying to hook up natural gas. Data centers are beginning to consume a lot of power. And so something needs to give. And it looks like one of the things that's starting to give is maybe those old HDDs.
So let's take a look at the guidance over last quarter and then this most recent guidance that they posted, how that's improved or has it changed at all. This guidance that you're looking at was the previous guidance for fiscal year 2025, revenue at 3.1 billion, which was a 10.5% year over year growth. They've increased that guidance slightly up to 3.15 billion in revenue, implying an 11.5% growth. So as Nick mentioned, this new hyperscaler win is not going to affect 2025. In fact, it's not even going to affect fiscal year 2026 so much, but it'll actually be in fiscal year 2027 where you'll actually start seeing significant revenue from that.
Yeah, so this upgrade to guidance is really just some good news as the company's storage technology just gets adopted by more enterprises. And one of the challenges this year, we shared with you our semiconductor end market cycle table earlier. Cloud and enterprise just now emerging from a downtrend. PureStorage has actually been able to continue growing at a 10% or higher rate throughout this downturn. And one of the challenges is that a lot of companies are getting pressured by this whole accelerated computing and AI infrastructure thing. They've been spending on GPUs and new networking, and they just haven't had the budget to spend on updated storage devices and storage servers. It sounds like maybe that's beginning to change. PureStorage getting some more attention, especially as some of their servers play quite nicely with NVIDIA accelerated computing infrastructure. And so maybe as we head into fiscal year 2026, we'll see a little bit of an acceleration in revenue growth. And again, as we showed you earlier, the CFO did mention adjusted operating margins expected to remain steady at 17% in fiscal year 2026, even as they invest a bit more cash into their own technology upgrade cycle as well.
Earnings per share and free cash flow per share for PureStorage have been very decent over the last few years. It's stalled out a bit, hasn't been a ton of growth in the last 2 years, but it's still coming in quite positive, and we expect we'll see an uptick in this in the coming years.
Yeah, especially as that hyperscaler deal begins to come online and they get the very high, expected to be very high profit margin licensing revenue from that deal. Of course, a lot of excitement around that. We think a bit of caution is in order here, though, because, again, we're still well over a year before the revenue and profit from that begins to kick in. Stock price, of course, been on a fantastic run in 2024. It was a fantastic pick at the beginning of this year, Kasey. It's actually up now as we record this, about $65 per share pre-market trading on December 4th. That's up quite a bit from the last time we did a PureStorage update a few months ago at $50. Here's the previous reverse DCF that we did. At this point, Kasey, though, it begs the question, the stock price is up significantly. Have the reverse DCF expectations changed dramatically to get us to a fair value of $65 per share?
Actually, you can see that the free cash flow per share growth jumps up just a little bit, 14 to 15% for the next 5 years. We get a lot of questions about this, and I myself have a lot of questions about how you figure free cash flow per share growth or using the terminal growth rate. Sometimes it's very sensitive. So is this really that much of a change?
In the grand scheme of things, it looks like it could be going from 12% 3 months ago to let's just say 15%, maybe a bit higher. Yes, it looks like a big jump, but bear in mind two things. First, PureStorage's free cash flow is actually down pretty significantly this year because of that cyclical downturn in the enterprise part of the computing market. So the higher growth rate for the next 5 years, in part, accounts for what we think will be a snapback in free cash flow, perhaps next year and the year after that, especially after free cash flow came in pretty light in Q3, this most latest quarter. And then a second, a bit higher, of course, to account for the stock price increase from $50 to $65 per share. But more than anything, we think it's the depressed free cash flow so far in fiscal 2025, especially the latest quarter that was just reported, that bumps up the expected free cash flow per share growth rate over the next 5 years. So this is just one scenario This isn't our expectation for PureStorage. It's a reverse DCF. It's one scenario that we plugged in here that gets us to a fair value on the stock of $65 today as of this recording. It's now up to you to run this and maybe some other scenarios and determine, is the market's implied expectations for PureStorage at this particular point in time reasonable? And some other things will go into your consideration as well, like the terminal growth rate. Some of you may use a higher growth rate, some may use much lower. It's going to depend on you and your style of investing, how you go about buying a company like PureStorage. But overall, this is one scenario that we think is plausible that the market has penciled in for PureStorage expectations, especially in the next 5 years.
Nice explanation. Thank you.
I hope that was a nice explanation.
So you may be wondering, what are we doing with PureStorage? This was one of our top stock picks for 2024.
One of Kasey's top stock picks for 2024. Preview, we're going to have a video reviewing that, and Kasey crushed me in 2024.
Yes, we will have a video coming out where we review all of our year's stock picks and what we're going to do for 2025. As far as PureStorage goes, this is one that we have added to the portfolio. If it takes some dips, we will probably add some more going into 2025. That's a preview for you all. This is a company that we have been allowing to gain a bigger position in our portfolio, earn a bigger position in our portfolio by its performance, and we're very happy with it so far. Thanks everybody for watching this episode of Chip Stock Investor. Make sure you sub to the channel, like the video, and share with your friends. We appreciate it. See you all again soon.